Hey, this is Carson Odom with Adams Wealth Partners. Thanks for joining me today as I walk through some tax implications of selling your home. Now, selling your home will result in what's called capital gains tax. So this is when you sell a piece of property and you have to pay taxes on the gain that you realize on your property. If you, as you can see on the screen, if you've held this property for less than 12 months, then it's going to be classified as a short-term gain, which is just ordinary income tax rates, just like if you were working a job. If you held the property for longer than 12 months, then some special long-term and lower capital gains tax rates are going to apply. So here's what you need to know about selling your home. Ordinarily, if you bought a piece of property for $100,000, sold it for $110,000, that spread of $10,000 would be classified as a gain. However, the IRS gives taxpayers what's called a gain exclusion. So for example, for married filing joint filers, you have $500,000 that you can exclude of gain whenever you sell your personal residence if you meet some qualifications. If you're single, you get a $250,000 exclusion. Couple of the items to be aware of. One, you have to live there and have it as your primary residence for the 2 out of the last 5 years. And going hand in hand with that, you can't have used the gain exclusion in the last 2 years. You have to have lived there in 2 of the last 5 years. So if you meet those, but let's say you only live there for 18 months, you have to move for work, a job relocation, there are some partial exclusions available. So in an ordinary circumstance, you have to figure out what your gain is. And one of the important factors of your gain is your cost basis. So first off, to calculate your cost basis, first we take your purchase price. That's what you purchased the house for. So let's just say a couple $100,000. Acquisition costs. This would be some closing costs, not all closing costs, but some closing costs like realtor fees would add into your cost basis. Lastly, improvements since you've owned the home. This would be if you painted the outside of your house, you redid the floors and countertops inside. That's all going to add on top of your purchase price to get your total cost basis. Once you have your cost basis, we can calculate the gain that you have on your home. So we will take your sales price minus your cost basis, and that'll result in your gain. So a circumstance might be you have a $750,000 sales price. Your cost basis that you've calculated is $400,000 between what you bought it for. Maybe you bought it for $350,000. You had $10,000 of closing costs that you were added to, plus you had $40,000 over a few years of owning the home that you add in to get to your total cost basis. Now your $350,000 gain is what you would technically owe tax on. However, if you're a married filing joint taxpayer, you have a $500,000 gain exclusion you can use. So in this circumstance, you would not owe any taxes. If you're single, you have a $250,000 gain exclusion. So if you have a $350,000 gain, you could exclude $250,000 of that. And in that circumstance, you would only owe taxes on $100,000. If it's long-term, like we mentioned earlier, it's going to be a lower capital gains tax rate, probably around the 15% range. So those are just a couple of things to note about if and when you sell your home, how taxes are going to apply. And of course, if there's any other questions that you have that I can answer for you, feel free to reach out. We're happy to help. Thank you.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor's situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.